Hey everybody, David Screek, Tuesday, November 26th, stock chart of the day. We'll be having charts. I'll be doing charts all the way through the holidays here. I didn't do one Monday, but we did do one on the weekend. So this is a chart that's kind of a revisiting chart. Like one of my best performing videos was this one here. The only investment that you have to make, you can see is the India fund. And this video has, if we quickly look here, this video has actually over 800 views on it. It's one of my best performing videos. So thank you very much. Hit like and subscribe, as they say. And I only have almost 600 subs on this channel, so that means people were coming from all over. So yeah, thanks for that. And I talked about India, talked about the long-term growth of it and stuff. So we're going to look at it. Now, I didn't own it. Now I do own it. And that was done back in April, May, and I bought it. I think I bought this in around $17 dollars a share. But here's the thing: they've had a couple distributions since there. Like they just did a 90-cent distribution, which is almost 6%, right? So including the distributions, I'm probably up close to 10% of this because my price is roughly flat to slightly down, but like the distributions, again, the power of the dividends, as they say, right? And you see the reason that it did this, had to scab up and down, is that people were getting in before the distributions. You can see that happened here in August too. So that's what happened. So I guess it doesn't really matter either way. If you sold some of the stock, blah, 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 and you're going to get the distribution here anyhow. So if you sold some of it here before it, and if you decided to sell a little bit, so that's basically it. But one thing that stock charts of the day, one thing stock chart does, stockcharts.com does, is we're going to show you this like longer term chart here. So the reason that I had some people asking me, well, this looks so different because Yahoo Finance doesn't adjust it for dividends. That's why I prefer stock chart of the day stock charts. Yeah, I prefer my own service, stock chart of the day, to all of them. But again, so it's stock charts because they adjust it and it shows the power of having the dividends, dividends paid out. Now, if you reinvest the dividends, it's even better. Like this $2 price here, if you did this reinvesting the dividends for 15 years, that $2 price is probably like $1. You're probably up 17x, not like 7 or 8x, right? So, and that just shows you the power of that. Like if you just get that distribution and then buy the stock back, like for example, let's say you owned, let's make it easier. Let's say you owned $17,000 worth, so 1,000 shares. Well, when you got that distribution of 90 cents recently, that's $900. $900 would buy you, so many shares, and you would just I guess 900 at 17 would be like, well, 500 shares would be 8,500. It'll only be like 50, 60 shares, but you could buy those 50, 60 shares. And then, if you're doing that every quarter, yeah, you're buying a couple hundred shares every day or every year. And it's like, you're, like I said, you only, let's say 1,000 shares, and all of a sudden, boom, you're getting like your 1,000 shares becomes, like 2,000 shares in like 5 years. You doubled your position, tripled your position. So just the power of dividends and reinvesting dividends. So there is something that's interesting too. Is that, I still think India is going to grow. I still want to see this dip because one thing about this, you can see the big decline in the 2008 bear market. You saw this decline here in 2012, in the 2015 correction in the stock market, 2018 correction in the stock market, the 2020 COVID smash, the 22 bear market. This thing always has 20, 30, 40. And then in the big busts, like 2008, 2009, or the early 2000s, this thing falls 60, 70%. And I would love just to be able to reinvest and buy more on that. So this is definitely one where you average down. I only have a small position right now, but because I want it to actually drop. So I know that may be an oxymoron to some people, but I want it to drop. So this is an interesting chart that I just found here. It was that this is essentially stocks, U.S. stocks taking over the world. It shows like really now we're even higher than the early 2000s during the dot-com bubble, and now they're only 50% of global market cap. So this is a sign again, like that the U.S. stocks. Notice this is when India and all these emerging markets did very well in the 2000s. U.S. stocks went from 45% to about 30%. Now they've gone back to 50. So now you kind of want to get out of U.S. stocks and you want to get into emerging markets because still the growth is in emerging markets. The growth is like what really benefited U.S. stocks was all this financial engineering. The ability to borrow cheap money, stock buybacks, etc. they really took advantage of that much more than emerging market companies because money is not cheap in places like India and Brazil. So, and this is another sign of why you want to be in. And I'll show you just quickly here. We'll go back 25 years so we can see the 2000s and look what Indian stocks did here. Like this went from, you can see like almost 50 cents a share in the below in 2001 to as high as $9. This almost went 18x. And this is just a market. This isn't even just one stock, like many other companies did well. So there's another thing I wanted to mention with the India fund. Someone said, "Oh, I actually erased the comment because I didn't. I usually don't do that, but I didn't like the comment because I thought it was erroneous. And I'm sorry, whoever wrote this, you're wrong. I'm not one to always say I'm right, you're wrong, but you are wrong on this. Says, oh, you can't do this. You can't just have these kind of gains because you're going to be paying taxes and all of this sort of thing, on the dividends and the whatnot. Okay, that's wrong for two reasons. Number one, you can always move to Hong Kong. You can always move to the Bahamas. You can always move to Puerto Rico if you're American, and you can live in a no tax jurisdiction. And I recommend people doing that. I know it's not for everybody, but if you do that, yes, you can accumulate all these gains tax free. Okay, that's number one. Number two, places like US, Canada, and most Western countries have some form of retirement plan that is insulated, from taxes. Our RSPs in Canada, 401ks in the United States. So you can buy something like this in one of those plans, and the dividends and everything can accumulate tax free. So that's an erroneous statement. You can get these things tax free. Okay, you got it in your basic brokerage account. Yeah, you're going to pay taxes on the dividends, and the returns won't be as great. But if you either live in a no cost or low tax jurisdiction, or you have a tax sheltered retirement plan, which most Western countries do, you can accumulate this tax free. And most of my subscribers are Canadian or American, so most of you have 401ks, and most of you had RSPs. So I disagree with that statement. I feel that it's not a correct statement, and I just basically proved to you why right there. So, and I still think this is the only investment you have to make. Like I said, I am looking forward to a drawdown, and just think, we're near all-time highs on the India fund with, again, emerging markets, basically being our US market dominating the world. So imagine what can happen. Again, like the 2000s, the India fund will be on steroids if that occurs, after some kind of bust here going forward. So, and then also too, the world has changed. In the 90s and 2000s, most of the investment in the emerging world, in terms of maybe not stock market money, but investment money, was still going into China. Plants, Amazon, Apple, all these people were investing in China. Amazon's now shifting to India. Other countries. I recently had an issue with my Samsung phone, so I just bought a cheap backup, and it's a Nokia. Nokia produces their phones in Finland and Hungary. A lot of these cell phones are being produced in Indonesia, Vietnam, etc. So people are moving away from China. So these other emerging markets, and I'm just focusing on India because it's just stock chart of the day. I'm not looking at all emerging markets, are going to see more foreign direct investment. I think COVID had a lot to do with it because people are very, very wary of trusting China after COVID because China basically lied about a lot of the things that went on. So anyhow, so that's the India fund. A little update here. Like I said, since I talked about it, it hasn't really done much, but with the couple of distributions that have happened since I talked about it in April, there's been 3. They've probably been worth about 15 to 20% of the stock value. So you're probably up 15 to 20% in, that 6 months, which is amazing for just like a very conservative ETF. So like I said, this is the only thing you have to need. And again, like I said, let me again show you, if you take off the adjusted for dividends, again, it looks like it's gone from 60 to 18. And then, so the power of dividends, right? Like, for example, let me show you another stock just quickly to show you the power of dividends. This is Altria, which we have on my list. You can see Altria with dividends is hitting all-time highs. And without dividends, you can see Altria, forget this here. I think that's probably some stock split that's not adjusted for. But its recent high in 2017 is still down 30-40%, or sorry, 20, about 30% from its high. So it just shows you, again, because Altria pays a huge dividend. They pay nearly 9%. Let's get a 5-year chart so we can really see it. Yeah, and adjusted for dividends, you can see Altria near all-time highs. Take away the dividends, we're just getting back to the 2022 high, right? So just show you the power of, like, and you got to keep this because the dividends this is more accurate because you are making that money. Even if you are paying taxes on them, okay, maybe the return is 20% less, but still, you're making money. And like I said, you can buy these in a tax sheltered retirement fund, or if you really want to be gutsy, move offshore like I did. So anyway, this is our stock chart of the day, India fund. I hope you enjoyed this. And like I said, if you were to buy here, because you are buying, let's get the shorter term chart here of the India fund before I end off here. You can see you're kind of buying it close to these recent highs of $19. So I don't know if I want to chase it here because I would like to see it go down to like 9 or 10 in a bear market. But I do what I did. I put my toe in the water. I bought a small position. I've made like whatever 15-20% on the dividend since then, and then I'm just waiting for it to go down more, right? And even if it's just a subtle decline, like this was 15 to 11, so that was like not roughly 25%, a little more than I think 27%. So even if it just have a 27% decline, that would put it around 14, 14 to 15, then you could buy more down there as well. So I hope you enjoyed this, and we'll have some more and during this Thanksgiving weekend. Oh, and remember, as I talked about, I'll talk about it more Wednesday. The name of the service, stock chart of the day will still exist, but it's going to be a subset of profit from pessimism. So everything's going to change going forward. And I'll probably finally get I really wasn't motivated to really change all this stuff until my new book was coming out, and that's coming out January 7th. And when that happens, I'm hoping that I really will grow the subscriber base again. Because I really haven't focused much on the newsletter in years past, like the last 5, 6, 7 years, because I was making good money consulting and marketing with junior mining companies. But now I really want to build it up, especially now I found my niche. I found what I want, this pessimism form of investing, doing more videos and written updates, making it more media orientated. Maybe one day I'll get better at technology in the next year or two so I can make these little flashier. I don't really care about that though. I just like good content. So everybody take care.